It's interesting as we get set up for more restrictions are likely later on today, and who knows how far reaching they are across the UK. What do you expect on the economy front, and what are the positives, what are the negatives at this point?
So, as you said, the economy did better over the summer than we thought. Obviously, eat out to help out, and maybe people staycationing. But as we look forward, I suppose we were expecting things to get tougher in the fourth quarter. We think growth will be pretty low, maybe just 1% in the quarter, as we do see more lockdowns. And I think you were just talking about the Brexit situation there. Clearly, that still puts some uncertainty over the economy, which probably adds to the challenges businesses are facing.
You mentioned the Eat Out to Help Out scheme, though. There's been a lot of criticism about what exactly it did for growth, and we saw a pretty disappointing outcome for the month of August despite this scheme, and it feels as though all it did was stimulate demand too early.
It's an interesting question. I think, of the service sector growth, it seems like about half of that did come from Eat Out to Help Out. So I think on the demand side, it probably did what it was set out to do. I think what we don't know is, is the acceleration in virus now related to that, or is it something that might have happened anyway, or is it related to students going back? So as with this whole situation, we continue to be really struggling to get the data quickly enough and sort of reliably enough to really know what's happening.
Mark, this morning we are seeing the Bank of England sending out a letter canvassing opinions about negative interest rates, tiering of savings and so forth. To what extent should the market view that as a signal of the impending arrival of negative rates, and therefore a view that the bank actually thinks things are a lot worse than official data is telling us?
No, it's an interesting point. We've been watching the bank for a while, and the messages have been somewhat conflicting on negative interest rates. This does seem as though there's maybe a shift in that process, although we haven't seen anything publicly. I suppose our view is that in terms of policy priorities, it would have a very marginal effect. And we continue to look more at the fiscal side of the policy agenda as the place where we need to see real action if things are going to get more difficult.
Is it your view that anybody who can get money, or anybody who wants money, can get money at the moment? I mean, it's been notable that we've seen some good mortgage deals pulled off the table for the man or street on the man or woman on the street, and we've also seen, it seems to me, tightening of lending conditions by the banks. Is the BOE going about this the wrong way? Should they actually be focused on macro-prudential measures to encourage the lending activity of banks to improve?
I think, interesting point that it's not clear that negative rates, what the impact will be, but there must be a good chance it will put more of a squeeze on lending, if you like. And I think we've seen quite a bit of news about worries about some of the loans that have already been issued that might default and what the cost of that would be. So I do think a more structured approach that really engages with the banks to talk about what we're trying to do. And I think the Chancellor talked about viable businesses, but I don't think he's really given us enough information on what viable is and how we should view that. And until we get that bit more clarity, I think you're going to see challenges in the lending market as we go forward.